Hi, welcome again to Financial Tea with Damilola. If you're yet to subscribe, I will need you to please subscribe, like, share this video. In today's episode, we'll be talking on how to decide which type of investment suits you. So I'll just talk on 4 major things to consider in knowing which type of investment you should be going for. Number 1 thing we'll be talking about is your time horizon. So what I mean is it short-term you're investing for, or is it a long-term goal you're investing for? So what is your goal for this investment? Do you want to invest for just a year? Or you want to invest for 2? Or you want to invest for 10 years? That will be what will guide you in the type of investment you should be going for. So if your goal is just to invest for your house rent, which is yearly in this part of the world, or monthly in some other places, then you know that you need to go for investment that are also short-dated. An example of that is treasury bills. You can also opt for going for mutual funds, and also you can go for maybe a 2-year bond, or 2-year bond, and then you sell it maybe halfway. That's in 1 year. These are the type of short-dated investment you can opt for. But if your investment horizon is a long time period, that means you're investing for longer time period, you can opt for real estate. Real estate over time is a good investment. It gives you good return on capital. That's on a longer period of time. Please don't go and buy a land when you want to pay your house rent next year. Don't go and buy a house when you know that you need to use that money to pay for something next year. You might not be able to dispose of that asset as quickly as you think, because real estate are really, once you know your investment goal, you can go for your investment type. Number 2 thing I'll be talking about is your risk appetite. You know the way food is, where you have big appetite to eat food or you have very low appetite. So also in finance, we call it risk appetite. So what do we mean by that? I'll just use an example to explain it. Are you the type when market or whatever you're invested in is moving by 5% or 10% and you're panicking? You understand? Every small movement already, you're panicking. You can't concentrate, you can't do any other thing. It might mean that your risk appetite is really, really low. So if you are the type of person like this, it's better go for safe investments. And safe investments that are available to you might be treasury bills, because they are guaranteed by the government of that country, bonds, or even mutual fund with a very strong financial institution. Then if your risk appetite is low, please stick to those. But if your risk appetite is really wide and you think you can master the storm, or whether it's your chairman Odogo, then you can consider equities. Equities also stocks, because the stock market, when it moves, it moves. When Nigerian Stock Exchange recently started gaining trillions, a lot of people were cashing out. And then in some days now, we are seeing it's losing hundreds of billions or so. And some people are losing. So yes, if your risk appetite is not strong enough for such losses, then you might have to stay away from equities, stock market for now. That's buying shares, and trading it, not just buying to hold. So you might stay away from that. But if you have the appetite, the risk appetite for it, yes, you can go for equities. Higher the volatility, the higher the reward. So the higher the risk, the higher your reward. It can also be the higher your loss. So you need to know that before you put your money into that investment type. Number 3 things we'll be talking about: know your goal. What is your goal for this investment? Are you saving for school fees? Are you saving for children's school fees? Are you saving for your rent? Are you saving up to create wealth? Are you saving up to buy that property? So you need to know your goal in investing, and that will also safeguard the type of investment you choose. And I've already mentioned this is also linked to your time horizon. So if your goal is to invest for a longer period of time, and maybe your children's school fees, you might go for long-term investment. You can buy a 10-year bond just commit your money to it, for example. Or you buy real estate that appreciates over time because you know that your investment horizon is long and your goal is to fund children's school fees and they are still in primary school. So you need to know your investment goal. And also, are you saving up to buy that bag or that wristwatch that caught your eye and you just have like maybe 2 months to your birthday and you want to surprise yourself? So you might have to go for a shorter term investment period. So knowing your goal helps you to determine the types of investments you're also going for, and also how to save up for such. Small and diversify. That's my number 4 lesson. Start small. Don't wait until you have 2 million naira before you start investing. Start small and diversify. That's our number 4 lesson for today. You don't wait until you have all the money before you start investing. Don't wait. Whatever you have as of now, you can find a safe investment or an investment that suits your risk appetite, your time horizon for it, and suits your goal. So start small and also diversify. Like they say, don't put all your eggs in one basket. Don't put all your eggs in one basket. So start small and diversify. That's our number 4 lesson for today. Our 5th lesson for today is keep learning. The whole lessons of this channel was to increase your learning, increase your education, financial literacy. So you need to learn the type of investment you are putting your money into. We'll be diving and going deeper into some of this type of investment at a later date. So you don't want to miss it. You don't want to miss it. And I'm sure before we are done for 6 months or even 2 months or 1 month, you will know the type of investment that suits you before you put your money into it. So keep learning. Your Google is there, your AI is there, your financial friends are there. You understand? That is what your phones are meant for. Just keep learning and learning, and you get better at it. Rome, they say, is not built in a day. Time. That's what we've learned from today's episode. It is your money after all. You don't want to just put it in anything without knowing what it is you're investing in. So yes, take time to learn, take time to plan, and take that step. So if you found this useful, please like, share, and subscribe to our channel. And we'd like you to make more comments. We'll try and make this episode maybe 5 minutes longer so that you get more from one episode than waiting for 3 minutes episode. I'll thank you once again for coming with me on today's episode. My name is Damilola. Bye. On our next episode, we'll be talking about risk versus reward. Why you need to take some little bit of risk if you're expecting some form of reward. That's so you don't want to miss the next episode. You don't want to miss. So stay glued and we'll have some more financial tips to spill for you. So take action for what we've talked about today.